Welcome, everybody. Thank you for joining me today. I am Tamara Brown. I go by Tamara Knows Taxes. And this is preparing for the tax season. As Ray said, we are coming to the end of the year. So now is the time to put in those last minute strategies, to organize your books, and to start pulling documents that you need in order to file your taxes for the tax season. Because before you know it, it's going to be here and it only lasts a few months. So you have to file it in those few months so we won't get any penalties. So that's the key here. So So again, I am Tamara Knows Taxes. I am a tax preparer and a bookkeeper for individuals and small business owners. I do both virtual and in-person services. I am based out of the Hartford, Connecticut area, but I do travel in order to bring my services to small business owners. I do have a degree in accounting. I am not a CPA. I get that question a lot. I am not a CPA. Usually you need a CPA if you run a nonprofit or you have a corporation because they do a lot of internal audits. So those are the real reasons we will need a CPA versus an accountant. And one of the things I like to specialize in is workshops designed for small business owners. I like to keep them interactive and fun. As you're going to see today in this workshop, I'm going to make it really interactive. So to make sure you're learning all the key information that you need to know, because we all know taxes wasn't taught to us in school. So that's why I'm here, in order to teach you guys everything I know. And on top of that, I am a QuickBooks expert, and I won't just say only QuickBooks. I work with Wave, Xero, all the other different accounting apps out there. But QuickBooks is one of the primary ones. That's why it's noted as a QuickBook expert. So let's get started. So today you are going to learn everything you need to know to file a Schedule C on your tax return. If you are operating as a sole proprietor or LLC, or you're a freelance worker, you know you will be filing a Schedule C with your tax return. So each individual in the US is responsible for filing a 1040 tax return. And with that tax return, you file what's called a Schedule C that attaches to that. So that basically shows all of your income and your expenses from your business in order to determine your taxable income. So before we get started, I just want to know from everybody, what's the first thing you think of when it comes to filing taxes? And you can use the chat, you could come off of mute, any way you want to tell me. What is the first thing that you think of when it comes to taxes?
I think of, ugh, not again.
You're not the only one, but it does happen every year. So it should be like something that we're used to. And if you have those um, systems in place, it doesn't become as complicated as people think it is. But yeah, you're not the only one. A lot of people say that. Anyone else? All right. Well, when it comes to taxes, I'm thinking about, here we go. I'm getting to know more business owners. I'm trying to get them more familiar with everything, because this is, like Ray said, a lot of people don't like this season of the year. They're like, oh, not again. So I try to get people thinking of it in a different way and give you the system to put in place so it doesn't have to be such a complicated task every year. So as I stated, we are what you file your taxes on is the Schedule C. So this is where you report all of your business transactions, your income, your expenses, everything. So the tax form is to report your income and expenses for your self-employment, and you're not registered as a corporation. If you have a corporation, you do file different tax returns. If you have a S corporation, you would file 1120S. If you had a C corporation, it'll be 1120C. And then if you had partners, you would do a 1065 in a Schedule K for each partner to get a copy. But basically, you're all reporting the same information. You're reporting your business transaction. What the only difference is the schedule you're putting it on. And again, if you are a sole proprietor or LLC, you are reporting this on the Schedule C, and that's what we're going to go over today. So even if you aren't one of those and you're operating as a corporation, I still encourage you to stay in this workshop. And the reason why I stay in this workshop, because like I said, all the information is the same. You're reporting all your your incoming transaction, your expenses, and I'm telling you how to get this information. So don't get so caught up in following the Schedule C, but that's what we're here talking about for the LLCs. And you want to think about this as a profit and loss statement because it reports your income and your expenses in order to show your net profit. So that is the point of the Schedule C because it has to determine your taxable income. And this is actually a copy of the Schedule C. So this is what it looks like. So when you're filing your tax returns and you have a business and they're asking you all the business information and you're putting in the income and expenses, this is where you're putting that information into. So this is how the form is actually split up. So it has the 4 different sections. You have your income, you have your cost of goods sold, your expenses, and your net profit. So your income minus your expenses equals your net profit. And your net profit is the taxable amount that gets added to your 1040. So if you also have an employer or you have Social Security income that you're receiving, they take this net profit from your Schedule C and add it together with your other income in order to determine your taxable income, your tax liability for the year. So this is where your report is. So the income is all of your the total of your products and your sales for the year. So I want you guys to remember all this information. So when you're reporting it, it's your income for all your product and sales for the year. So even if you don't get a tax form for something, you're responsible for reporting all of the income that you received for the year. Okay? So the cost of goods sold, that's the next thing that you're reporting on the tax return. So this is usually your inventory or everything that it costs to produce the product or service. So in simple terms, cost of goods sold would be packaging. If you had a product and you had to package it in a certain box in order to send it to the customer, that packaging will be considered a cost of goods sold, as well as the employee, the person who packaged the item will also be under cost of goods sold because that's the person that's producing those items for you in order for you to resell it. So basically, it's anything. How much did it cost me to make this one thing? If it goes into that product or service in order to turn it over to the customer, that is a cost of goods sold. So you always want to keep that in mind, okay? And then your expenses, those are your day to day. Every time you're spending money, that's an expense. Every expense is not a write off, but every expense is an expense. If you're spending under your business, it's an expense. So you always want to make sure that you are tracking all of your expenses, whether you're paying in cash, credit card, check, or through your bank. You always want to make sure that you're tracking all these transactions, okay? And then your net profit. So the net profit is the last thing that you're always going to see on the tax return. So remember, your income minus your expenses is your net profit. And I'm just going to go back to that screen so you can have the visual again. So the income right here in the purple box minus everything in the golden or brown box, it becomes your net profit. So that is what you're reporting everything on your tax return. So it is the income, the cost of goods sold, the expense, and the net profit. So before I move on, because I like my I like my workshops to be interactive. I like people to be involved. So I'm going to throw some games into here to see how everybody is paying attention. Hopefully, we can track your answers some way because I would love to send a person who guesses the most answers a little prize. Because if you didn't know, I have a lot of books and workshops that I can give you as a prize. So I would like to maybe give the winner, if you answer a lot of these questions, I would like to give the winner a prize, maybe one of my bookkeeping books. But we'll determine that at the end. So here we go. We're going to do a first game. So this is the game one. So I want to see if you guys were paying attention, if you could identify the income, the expense, or if it's a cost of goods sold. So I'm going to put a scenario on the screen, and then you're going to type or yell out whether it's an income, expense, or a cost of goods sold. You can also use I, E, or C in the chat if you prefer to do that and don't want to type the whole thing out. So are you guys ready? I hope you are, because we're going to get started with the first one. So the first one is a wholesale invoice for 50 t-shirts. Would that be reported on your income, expense, or cost of goods sold? So which category would this be reported under on the Schedule C tax return?
Cost of goods sold.
Anybody else?
I thought that would be an expense.
Anybody else want to give an answer? Yes, it was the cost of goods sold. Because a wholesale, when you buy something from a wholesale person, you're basically buying it at a discounted rate in order to resell it to a customer. So the wholesale invoice for the 50 t-shirts is considered a cost of goods sold. So great job to the person that got that right. So the next one we're doing is you received a $2,800 check payment from a client. Would you report that under income, expense, or cost of goods sold? And I just realized my chat is not open, so let me open that. I see income coming through the chat. All right, anybody else?
I was thinking income as well.
Yes, it's income. Great job, guys. So the next one, gas receipt for a client meeting. This might be a little tricky because we didn't exactly go over this type of stuff, but would you think that was an income, expense, or a cost of goods sold? It's a gas receipt for going to a client meeting. So if you didn't know, mileage and gas is an eligible deduction for your taxes. So this is a gas receipt for your client meeting. And I see expense in the chat. And yes, it is an expense. Great job. So I'm going to go to the next one. This is a client invoice marked paid for $1,000. So you actually gave a client an invoice for $1,000 and they paid you, and it is marked as paid. So would you report that in your income, expense, or cost of goods sold?
The cost of goods sold, I guess.
Nope, that would be
Oh, that's
income.
income. Oh.
Yep, because the clients paid you, so you want to report that as income, because anytime the
Okay.
client pays you or you sell a product or service, that's always income. Anytime you take money to produce the product, so it's cost of goods is basically an expense. But you have two different expenses on the Schedule C. You have the expense where it goes into the product or service, and then you have the expense where it goes into your operating costs. So operating costs basically means what it costs to run the business. Cost of goods is how much it costs to produce the specific product or service. So good job, anybody. Any questions on that so far? All right, perfect. So now we're going to talk about the income documents and payments. So the thing about it, this is important, is there are times you will receive tax documents in the mail. Everyone is so familiar with a W-2. Even small business owners tell me they have a W-2 when they actually have a whole completely different tax forms. The thing about the tax form, the name of the tax form is on it. So it's important that you're looking at the tax form to understand what that tax form is, because each tax form has a different purpose. So it's important that you understand and when you're going to receive one of these and when you're not going to receive any of these. But you will have to know that any income that you receive in your business, whether it's selling a product, selling a service, or receiving a private grant even, you have to report that on your tax return. And there are certain instances where you're going to get that tax form. So again, an income tax document is anything that shows shows that a customer paid you money. So it can be, the proof can be a screenshot, a report. I recommend, if you're receiving cash payments or check payments, that you are keeping some type of log or invoice log and a payment log to show that these customers are paying you. If you have QuickBooks or Wave or anything, you should be including that as well. Every time a customer pays you or you're billing a customer, you should always be reporting that somewhere, somehow. So we're going to go into the different tax forms. So the first one is the one you should be most familiar with as a small business owner. This is the 1099 NEC, and it used to be called, oh my gosh, I can't remember the name of the form, what it used to be called when I first started. But they changed the name a couple of years ago, but now it is the 1099 NEC. So you will only receive this form if a customer paid you over $600. Also, if you completed a W-9. So a W-9 is basically a tax form that they give you where you're just putting your social security number on and your filing status and your mailing address. That's the only thing that you're putting on a W-9. So usually if a customer gives you that, it is a good chance that they are going to give you a 1099 at the end of the year. One thing I do want to say is they are required to give it to you if they paid you over $600. They are required to give you that form if they paid you over $600. However, they can issue this form at any amount. So don't think just because they issued you under $600, they won't issue this form. They may issue this form, especially if they are a nonprofit, because nonprofit organizations are required to send out the 1099s if they issued payments. Okay, so you always want to make sure that if you got a 1099, if the customer paid you over $600, you should know that you should be expecting a 1099 NEC from them. And if they gave you a W-9, it is a good chance that they will be issuing you a 1099 NEC. And you'll usually see the amount that they paid you, the total amount, in box 1. Okay, if they withheld any taxes, you will see it here, but more than likely they don't. But there are some cases where they will withhold taxes, but more than likely you'll only see the amount right here where it says non-employee compensation, because you are not an employee. So you get a 1099, you don't get a W-2. So any questions on that, or on the 1099 NEC? Because this is the most familiar one that you receive as a small business owner. All right. So if there's no questions on that, I'm going to move to the next form. So the next form is the 1099K. So if you guys are receiving or doing transactions out of Square, Shopify, Venmo, Cash App. Oh, I noticed I put Square twice. Well, that's okay. Stripe. Shopify, Honeybooks, and I put that twice as well. Any of those apps, you will receive a 1099K if you process sales over $5,000. And when I say process, I mean the transaction happened through that software, like you process a credit card payment through there. That does not mean you issued an invoice through there, they paid you in cash. If you issued an invoice through Square and the customer paid you in cash, it would not be included on this form. So that's one important about those manual transactions that you're tracking, because it's not going to track these transactions. So when you receive these forms in the mail, the 1099K, that means you process over $5,000 in credit card payments through that app. So if you processed over $5,000, you are going to receive a 1099K. You usually see a lot of these with brick and mortar owners. I always see a lot of the 1099Ks because they usually have the point of sale systems. So they have a high traffic of processing those transactions in those. So those are the times I usually see a person receive a 1099K. However, you might be one of those business owners who are processing a lot and you will receive one of these. So if you are processing any of through any of these apps or a third party app that takes payments, if you process over $5,000, they are going to send you a 1099K. However, you always want to keep in mind, just because they didn't send it to you does not mean you don't report it. The way you will get that information is you would have to print a summary report at the end of the year to show all of your total sales for the year. That's how you will report your income. If not, you will get one of these 1099Ks. However, I do recommend that you always rely on your sales summary versus the tax form versus this 1099K, because again, if you did not process any credit card transactions, you were issuing invoices and stuff through there, it's not going to be captured on this 1099K. So you always want to make sure that you are capturing all your transactions and not relying on the tax form. Does anybody have questions on the 1099K? Okay. So these are the situations where you usually won't see, you won't get a tax form for the income. It's if the client paid you in cash or check. And most likely, if they did not give you a W-9, you won't get a tax form. And if they paid you under the $600, you won't get one. If the client paid you through your personal Cash App, Venmo, and Zelle, you will not get a 1099. So you always want to make sure that you're not getting paid through your Cash App, your personal Cash App, Venmo, and Zelle, because it is not being tracked and it is considered a manual transaction. You issued an invoice to the customer, but they paid you in cash. This will not be on the 1099K because you did not process the payment through the app. So you will not get a tax form of that. And if that payment, they didn't process anything over the $5,000, you wouldn't get one as well. So does anybody have questions on the income form that you should be expecting to receive as a small business owner? Or the ones you shouldn't receive, or how to get your income in general? Any questions? Okay, so we're gonna go on to our next game to see how familiar you guys are with the income forms that you need to report and have pulling your income information for your Schedule C. So I want to know if you know your tax document. So I'm going to show you the scenario and you're going to tell me if you're going to receive a 1099K because it was over $5,000. If you're going to receive a 1099 NEC because you completed a W-9 and you received over $600, or if you're going to receive no tax form at all. So you guys ready? Let's get started. So the first one is a client paid you $1,200 for services using Zelle, but you did not complete a W-9. Should you get a 1099 NEC, no tax form, or a 1099-K?
It's a 1099 NEC.
Gotta get a tax form.
Yeah. Yup.
At least. So this one,
It's the first option.
okay. The first one is no tax form because remember they paid you using their personal Zelle and you did not complete a W-9. So you shouldn't expect the tax form, but you should report the amount, the $1,200 as a part of your income on the Schedule C. So good guess. So the next one is you made $4,500 selling products through Square this year. Should you receive a 1099 NEC, a 1099-K, or no tax form? And I'm gonna just come out, guys.
This one is the 1099-K.
So I see 1099-K in the chat, and you said 1099-K, and the answer is no tax form, because remember the threshold is $5,000. So because they only got $4,500, you will not get a tax form, but you still are going to report the amount as part of your income. Good guesses, everybody. I love that you're still guessing. So you did contract work for a company and they paid you $2,800 and you completed a W-9. Do you get a 1099 NEC, a 1099-K, or no tax form? I see 1099-K in the chat. All right, so the answer for this one is a 1099 NEC. Ray, I seen your answer just come through and you are correct. And that is correct because you completed a W-9 and the company paid you over $600. So remember, payment processing apps, they're the ones that send you the 1099-K. People and companies are the ones that send you the 1099 NEC. The last one, you received $800 in checks and $600 in cash from various customers. That's the key word right there. Various customers, and the total was 800 and the total was 600. So are we getting a 1099 NEC, 1099-K, or no tax form? So I see Ray put no tax form in the chat. And I see you put no tax form as well. You guys are right. Woo! No tax form. Yes. But we always remember, you get no tax form, you guys should be tracking your cash and the income that you receive, the cash and the check that you receive, and you should report all of this as part of your income. Yes. Good job. So now we're going to talk about expenses and the documentation for the expenses. So one thing you should know is every expense is not an eligible deduction under your tax return. And this is very important because just because you spend it does not mean you can claim it on your tax return. And the point of claiming deduction is to make your taxable income less. So when you're estimating your taxes and you're preparing for the year, it's important to know which one is going to reduce your taxes and which one is not going to reduce your taxes, because just because you're spending it does not mean it's eligible. For example, meals, business meals. At once upon a time, that was something that you can deduct, but now the rules have changed around business meals. You can usually only take it if you are traveling, not local. You can't deduct it for having local meals or going to a restaurant and having a business meeting. Those rules change because tax rules change all the time. So it's just important to know, even just because you spent it does not mean it's going to benefit your business anyway. It's just going to be an expense that you report on your books. So here's a couple of the expenses that are just a regular expense, and there's ones that's eligible deductions. An expense under your business is an expense that you can support, that it supports your business. If you don't support your business, and if it's not supporting your business any type of way, it is not a business expense. For example, I see people try to deduct clothing all the time. Those aren't business expenses because it's not specific to your business. If you wore a uniform now, that's specific to your business. But regular clothing is not specific to your business, so it wouldn't be a business expense. So it's always important to know the difference. Personal expenses that you purchase under your business, those are not, they might be an expense, but they're not an eligible expense. And it actually isn't an expense under your business. So you shouldn't even be doing anything personal under your business. Gifts over $25. It's an expense, but it's not an eligible deduction. So if you are buying a gift for a client, you always want to max it at the $25 because anything over that, you can't deduct it, or it just becomes a regular expense. So that's always good things to keep in mind. Federal taxes and fines and penalties, those are expenses, but they're not eligible expenses. Charitable contributions, especially as an LLC or sole proprietor, those are not an eligible deduction under your business. So when people are asking you to donate under your business and you are operating as an LLC or a sole proprietor, that is not an eligible deduction under your business. So you always want to keep in mind. If you come to my workshops, I'll show you how to flip it and make it something else. But there's always ways around everything that you do. But I just want to let you know that if people are asking you to donate under their business, it's not an eligible deduction. It's just an expense. Entertainments. And once upon a time, you can define certain entertainments and claim it under your business, but that's basically not anymore. One of the things that I created was the tax index. It is a virtual ebook that you can find on my website, tamaraknowstaxes.com. You can also find it on Amazon, where it has hundreds of eligible expenses that you can claim under your business, and it actually shows you what's not eligible as well. So if you guys are familiar with eligible expenses or eligible deductions, I do recommend you get in the tax index because it will help you when you're organizing your business. But things are eligible deductions are always something that you can support. Anything that you can support under your business. There's some people, I build relationships with different auditors and people in the industry, and some of the things that they will fight for and support as a business expense, you'd be surprised for. But as long as you can support it, it can be a business expense. So always remember, support, and proof. You always want to have the support and the proof. If you're spending it, you always want to hold on to your receipts and anything that showed how you spent the money. If you got audited for any reason and you cannot produce that receipt that showed how you bought it, it is no longer an eligible expense or eligible deduction. So you always want to make sure that you're hanging on to all of your receipts and all of your invoices, everything, just to have that support. If you don't have the support, it is not eligible deduction. You should not be putting that on your tax return. I think should never go onto your tax return. Anytime you say, I think I spent this much, no, don't put that on your tax return. You are opening yourself up to a liability, especially if those people are those round numbers. We all know most of the time we are not doing business with round numbers. It's very rare that you have a bill that says $100. It'll usually say like 129.65 or something like that because you're adding tax to it. So when you start having a lot of round numbers on your tax return, it opens you up to an audit because now your return looks funny because all you have is round numbers. So it shows that you're basically guessing these numbers. So you always want to make sure you have the proof. You're always calculating, adding things up, and then you're having the real numbers on your tax return because it all comes down to proof. And let me tell you, if you got audited for any reason, they can open you up back to 10 years. So imagine you getting audited for 1 year and then you have to open your tax return for 10 years past. And then they find errors on all those tax returns. What do you think is going to happen? So that's why you're going to end up paying all this money in back taxes and having to produce proof for everything. So you don't want to do that to yourself. You always want to make sure anything that you put on your tax return, you always make sure that you want to prove it. Okay? Any questions on that? All right. So we want to see how much of this you guys picked up. So I want to know if this is, each scenario is deductible or it's not deductible. So you can put D or N, D in the chat if it's deductible or N if it's not deductible, or feel free to yell it out as well. So here we go. This is game 3. Know your deductions. So the first one is you bought printer ink for your business and kept the receipt. Is a deduction or not a deduction? Yeah, it's a deduction. Good job, everybody. So the next one is you bought office chairs but lost a receipt and can't show proof of purchase. Is a deduction or not a deduction? I say not. And I see deduction. I see a not, and I see deduction. And the answer is it is not deductible. It is not deductible because you can't find the proof to show that you made the purchase. So remember, it all comes down to the proof. That's why I bought, well, I'm gonna go back. That's why I buy a lot of things on Amazon because Amazon has your history in it. So if you can't, even if you don't have the receipt, you can pull up your Amazon report and you can actually see the things that you purchased. So shout out to Amazon real quick. Oh, and I said Amazon right here. So you purchase shipping boxes. This is the next question. You purchase shipping boxes and tape for your product orders on Amazon. Is it deductible or not deductible? So I see deductible, deductible. Yes, it's deductible. Perfect. And last one, because I like to do it in fours. You drove to a client meeting but kept no mileage log or notes. Is it deductible or not deductible? You both are right. It is not deductible because you didn't keep any notes. So you can't support it. So everything is a guessing game. So we don't put guesses on our tax returns. So great job, guys. So now we're going to go into the expense types. And this is basically the recap of the cost of goods sold and the operating expenses. I feel like it's really important, especially when it comes to like grants and stuff. A lot of these terms that we use and things that we do in accounting and taxes, you reuse them again. So they come into play in a different situation. So it's always important to know the difference between a cost of goods sold or operating expense, especially when you're running with grants and stuff like that, because they want to know the direct costs versus the indirect costs. So in a tax return, the cost of goods sold is actually going to reduce the income that you're making, that you report. So if you say you made 50,000 in income, but you spent 25,000 in cost of goods sold, that means the income that you really reporting is going to be the $25,000 because that took away from the income cost. So it's always important to know how much you're spending on the products versus how much you're spending on to run the business. And here's just a recap of highlights of the different things, the cost of goods sold versus the operating expenses. So it's cost of items that you resell. So the packaging, if you were a baker or a cook or anything, all the ingredients that you use to make the product, the employees that are cooking and packaging the product, that's also cost of goods sold. Wages, delivery to the customers, if you are delivering stuff to the customers, those are always cost of goods sold. So you always want to think of anything that you take and then you're handing back over to the customer, those are always your cost of goods sold. So you always want to keep those in mind because that's a different expense than the operating expense. So your operating expenses are usually your rent, your utilities, administrative staff, your business insurance, your advertising, your accounting software, and your reoccurring software fees, because those are things that you don't necessarily need in order to produce the product. You may need it to run your office, but you don't need it to produce the product. So that's the difference between the cost of goods and the operating expenses, okay? So do we have any questions on that? Because we're gonna roll right into our next game. All right, perfect, no questions. So I'm pretty sure you guys are familiar with these that we did back in school. So I'm just gonna go through it one by one, and you guys are gonna tell me if it's a cost of goods sold or if it's an operating expense, okay? So the first one that we're going to do is advertising. Is advertising a cost of goods sold or is it an operating expense? Got operating expense. We got an operating expense. I'm assuming that's what you mean as well. Yes, it's operating expense. See, you guys are catching on. All right, next one, gas for delivery driver. Is that a cost or is that an operating expense? We got cost of goods sold. We got operating expense. Let's see. It's cost of goods sold. And remember, because the delivery driver is delivering the product to the customer. Even if you had a delivery, if you had a service, say you had a delivery service, you were DoorDash or something, that gas that you're using to go from A to B is a cost of goods sold because that's what you're doing in order to produce that service. So you always want to keep that. If you were meeting just clients, then it would be an operating expense. But you're actually delivering the product, so it becomes a cost of goods sold. So you always want to keep that in mind. But good job. That's actually a trick question. Oh, sorry, I told you guys the next one, but hopefully you didn't see it, but we're gonna go over it. So the wholesale processing fee, is that a cost of good or is that an operating expense? Cost of goods sold, yes, Ray. So since you guys, I showed it a little, I'm just gonna show the answer. So yes, it is a cost of goods sold. So the next one, a monthly Zoom fee. Is that a cost of goods sold or is that an operating expense? Operating expense, we got that. Yep, operating expense. Yes, it's an operating expense. So good job, guys. So always remember that anything that you take to put into the product or service, that is your cost of good. Anything that takes to run the business is an operating expense. So it's good job, everybody. So estimating taxes. So it all comes down to putting all this information together. So once you put all your income together, so you have all your income, all the customers that paid you in checks, all the customers that paid you in cash, all the customers that paid you through the processing payment systems. So the Square, Shopify, all of those stuff, the PayPals, you add those all up and then you put that into your income. So the cost of goods sold that we just went over, you will take everything that it takes to produce the product or services that you're doing. That's the next thing you're reporting on the tax return. So you're going to total all that stuff up. Anything that you know you went through, your books, you're using QuickBooks, you're using Wave, you're doing all that stuff. You've been doing your bookkeeping through the year and you're saying, yep, these are all my cost of goods sold. You're going to put that number in the next one. And then it's not as simple. The tax software walks you through all of this stuff, but this is where it's going to land on your tax return. So the next one is your expenses. So remember all your eligible expenses. And these, I don't know if you can see it good, but all of these are your different categories for your expenses on the tax return. So you went through your bookkeeping software, you took out all your eligible expenses, you used a tax index and you confirmed it. Yep, these are all of my eligible deductions. Those will get entered into this part of the Schedule C. And then when you take all of your income and you subtract the expenses from it, that leaves you with your net profit. So you have money. If you have a positive number, that's your profit. If you have a negative number, that is a loss. So if you have a profit, that is the number that gets reported to your 1040 tax return. And that is the number that gets added together with all your other income. And another thing I want to tell you is you can estimate your taxes there's a few different ways you can estimate your taxes. So one of them is going on the IRS website. And the other one is going on my website because I did put together a calculator for clients to use and estimate their taxes and estimate if they were going to get a refund based on all that information. So once you have all your income and you've done the Schedule C or did some type of, you recorded all your income and subtracted your expenses and you know your net profit, you can go ahead and then estimate your taxes because that's what you're doing, using to estimate your taxes, your net profit amount. And you want to use that in order to total it up with all your other income. And that's what's important because that's what they're going to use when they're totaling up how much taxes that you use for the year. So you can go on the IRS website, which is irs.gov, and look for the W-4 withholding calculator. Or you can scan this QR code right here that you see on my screen, and it leads you to asktamara.info, which is my tax preparation website. And on there, you will see the link for the refund estimated calculator. You'll be able to actually use that to estimate the taxes to see if you'll be getting a refund in the year or not. In addition to the net profit, in addition to your income tax, you always get taxed for self-employment as well. So that net profit amount that you actually found out by doing the income minus your expenses and getting the net profit amount, you always want to multiply that amount by 15.3% because in addition to your income tax, there's another tax on your tax return, which is called the self-employment tax. So you want to make sure that when you're estimating your taxes, you're always doing the 15.3% of your net profit in addition to the income tax. So when you're doing this calculator right here, it will, when you put in your net profit amount, it will also calculate the 15.3%. And the IRS.gov website does that as well. So it always accounts for the 15.3% of the tax in addition to your income tax. So remember, there's always two tax that you pay as a self-employment person when you're filing your taxes. You're paying the income tax and you're paying the self-employment tax. And both of those are based on your net profit. Okay? All right, so now you know what I know. We went over the Schedule C. I told you all the income documents that you need to pull. I told you about the cost of goods sold, the expenses, and your net profit, and how to use that information in order to to estimate your taxes. So now, like I said, now you know what I know. Does anybody have any questions on anything in general about the tax season, anything I went over? Now is the time to ask.
No, I don't have any questions. This was really, really helpful. Thank you.
You're
I like,
welcome. And I think we're the only ones here still. So
yeah, I think,
yeah, we lost the other person, but that's
yeah,
fine.
she is back. I think she got kicked or dropped, but
But everybody participated. Yep, right back. So Elam, here, did you have any questions? So we're wrapping it up. Now you know what I know. Do you have any questions on anything we went over today?
Only question is, so let's say you have like a regular job and then you have a LLC. How do you file both of those taxes?
So you file them all at the same time. So all of your income gets reported on your 1040 tax return. So it all gets reported at the same time. So what you're reporting on when you do your taxes, you have different schedules that are attached to the 1040 form that where you're reporting your different buckets of income. So where you're reporting your self-employment income is on the Schedule C. So when you fill out the Schedule C, that information gets carried over to the 1040. So it all happens at the same time. You're not doing them separate. You're not doing one before the other. You're doing them all at the same time. So if you're using a software, it's going to say, do you have a self-employment business? You're going to say yes, and then you're going to enter that information so they can do the Schedule C. And once it determines the net profit, it brings it over to the 1040. So, and when you're doing the W-2, it says the same thing. You enter the W-2, you're filling out that schedule, and it gets reported over to the 1040. So all of your information gets reported to the 1040, and you're doing all at the same exact time.
Thank you.
You're welcome.
so
Does
tomorrow,
anybody have any other questions?
yeah, I
Yes.
have a question. Who won? Who won? Who gets the prize?
Well, that's why I said I hope we're recording this in some way so I can go back and look and see who won the prize because
Oh,
I wasn't keeping track.
oh, okay. All right. Sure.
Well, Ray, hopefully you can look back and you can tell me who the winner was. But if not, you guys are all winners because you know why? Now you know what you need in order to file the 1040 for the tax season. So you're all winners in my book.
Thank you. Thank you. So thank you so much for this information and taking the time out of your day tomorrow. Thank you so much for
You're welcome.
joining
And
us
if
for
you
this seminar. And I'll give you 1 minute back in this 1 hour time session. So thank you, everybody. If there's no more questions, I'm gonna let you all go.
Thank you, everyone.